We're gonna pick up in a quick and efficient way about fundamental analysis that help for your trading and investment. There are two major ways: fundamental analysis and technical analysis. What's up, guys? This is Borrow 3.8. Thanks for watching today. Before anything's missing out, please make sure you have destroyed the like and subscribe button down below this video to avoid from missing out on lots of free cash gift drawing we will come up with soon. So, in today's video, we're gonna pick up in a quick and efficient way about fundamental analysis that help for your trading and investment. Regarding how to analyze stocks as well as the financial assets, there are two major ways: fundamental analysis and technical analysis. Fundamental analysis tells you what to buy, while technical analysis tells you when to buy. We will simply focus on the fundamental analysis in today's video, but please don't forget to check into my other video for technical analysis too. Okay, so what is fundamental analysis? As some of you may have known, fundamental analysis is a method to measure securities' intrinsic value by examining the related economic and financial factors. Fundamental analysts study anything that can affect the security's intrinsic value, from macroeconomic factors such as the state of economy and industrial condition to microeconomic factors like the business model and quality of the company's management. The ultimate goal here is to find a number to compare with the security's current price in order to see whether the security is undervalued or overvalued. This method is considered to be in contrast to technical analysis, which is used to forecast price direction and movements with the security's historical market data such as prices, volumes, charts, or indicators, etc. Once again, fundamental analysis is to gather information and insights from many aspects, from the economy, financial reports, business operation and management, and etc., in order to find out the intrinsic value of the company. You will buy in when the stock price drops below the intrinsic value. You may sell out when the stock price rises above the intrinsic value. This is the basic concept for how fundamental analysis is used for your trading and investment. To this end, there are two major parts in fundamental analysis, including qualitative and quantitative. In qualitative analysis, we focus on non-quantifiable fundamental factors like technology breakthrough, competitive advantage, and management quality of a company. As for technology disruption, for example, when we think about how green energy will replace oil, how development of electric vehicle will impact oil company stock price. There are too many factors involved here which cannot be quantified, right? So this is one example to do qualitative analysis. Regarding competitive advantage, for example, Coca-Cola has achieved its business for a long time with a great reputation, brand name, secret recipe, etc. It's really hard to enter and compete for the other soda companies here. So Coca-Cola has a very strong economy mode as well as competitive advantage here. This is another example for qualitative analysis. How about management? In management of a company, many factors cannot be quantified for CEO, CFO, COOs, and all the influential key managers, like their personalities, their charms, their experience, connections, EQs, as well as contributions from many aspects. There are other qualitative factors like business model, corporate governance, and so on. These are the factors to consider in qualitative analysis. There are things which cannot be quantified or explained in numbers. On the other hand, in quantitative analysis, there are factors which can be quantified, usually with the major focus on financial analysis, like value of assets, liabilities, equities, numbers of revenues, incomes, costs, cash flow, etc. Or there are many ratios such as price to equity, price to book, return on investment, return of equity, and so on. They're usually available in financial reports like balance sheet, income statement, cash flow statement. This is used to assess the financial strength, profitability, and the growing potential, usually along with macro, industrial, and market analysis, as well as business model and operational analysis. Okay, the concept is quite simple, right? Let's have a quick recap here. Fundamental analysis has two major parts: qualitative and quantitative. Here are some pros and cons for fundamental analysis here. As for pros, fundamental analysis can be used to find intrinsic value gap for price taking, and it can use to learn more insights and practical information. It also helps us to know the economy, the company, and the industry better. As for cons, fundamental analysis can be just somewhat ineffective in many market conditions. Also, there is just too much information to research and analysis. And it's really difficult to filter noises and find out the truly useful information in the end. That's why it's been losing edges in price discovery in modern financial world, especially for day trading. However, there are some key measures in financial analysis to focus as trader here. In fact, many traders don't have skills and time to do complete and thorough financial analysis. But some financial highlights and shortcuts have been always paid attention to for all the investors and traders. It's important to observe changes in revenues and net income, as well as some ratios like a PE ratio, dividend payout ratio, ROI, ROE, etc. These are the keys to help traders have a quick idea regarding the financial strengths, profitability, and growing potentials of companies. Again, these are used to have a quick idea for quick reference, but not necessarily as a strong support for a day trader. As you may have heard a lot of cooking the book, which means that financial figures can be manipulated or faked to fool and trap investors in many cases. So for day traders, they often use some basic key measures in fundamental analysis as additional supports to help them compare the facts of different companies and equities. But not all traders necessarily rely much on those measures. For example, Tesla's stock price surge in past few years was not much related to its financial. Instead, it was more related to the qualitative factors like the plans, goals, and dreams of Elon Musk. Another example like crypto-linked companies, their stock price have been moved much more by the macro factors in cryptocurrency, which have not yet even found a clear way of its price discovery. Besides all that, in modern financial world, there are just too many shocking and unprecedented things that pop out one after another to challenge the traditional way of price discovery in fundamental analysis. It was Donald Trump last year and Elon Musk this year. It's been turning into a time of celebrity fashion in financial world right now, let alone all the global turbulent event going on. That is how technical analysis have been applied more and more in many market conditions recently, while uncertainty and volatility keep hitting markets around the globe. Fundamental analysis used to make the call a lot in financial history, but it's definitely losing its edge a lot in modern financial world, at least recently. But the basic concept and measures of fundamental analysis are still certainly important to equip for many traders and investors. Alright, thanks for watching today. Hopefully this quick review is helpful for your trading and investment. Please leave any of your thoughts and comments down below, and never forget to strike the like and subscribe button. I'm looking forward to having more with you. Until next time. See you.